Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me at _finance, and if you want to join our community, finding-value.com. That's where I dive deeper into all of these topics, looking for potential investment opportunities. We just went over a Q&A session this weekend. We did cover some of the opportunities out there. I did a quick portfolio allocation of the companies that I like for an aggressive portfolio, one that can play the commodity bull market kind of to the max, to the upside. And I put some rough portfolio allocation percentages to the companies that I would overweight myself. Obviously, it's not advice for anyone else, but that's kind of the way that I would set it up for what I think the bull market that's coming in commodities and that we're in, uh, how I would kind of line things up. So if that sounds interesting to you, use special as a coupon code for savings on both the monthly and yearly memberships. So coming on down, Uselink, we've got IWM, which is the iShares Russell 2000 ETF. It's into a big double resistance, says Casper. It has to bear that in order. I think I don't know what this sentence is, but until then, I don't bearish neutral here. So I think what he's saying is we got the chart here. We've got resistance coming up through this line there. And we've got a trend line coming on up. And we've broken these support lines to the downside on both of these trend lines. The resistance line coming up here, and then the trend line coming on up. So we are underneath it, which is a bearish formation. So if this thing does roll over, that's something to watch for. I know Trump is coming out, releasing some information, some news on Monday, which will be today. And we'll see how that impacts the charts here and if we get back above that resistance. It could be, and I'm just saying, we've got Besant, who is, I'm sure, a very good chart reader. He's been part of the markets for a long time. Maybe he sees this bearish setup and they are releasing news with, quote, China or whatever else they're going to release to get the markets back above these resistance lines. And the better you get at reading charts, the more you see how things kind of play out. They release certain information like right at support, like tariff information. Sometimes they want to get things back up, so they release other pieces of information. Other times, I think that there is questionable releases of news against certain things that they want to control in either direction, either upward or downward. It just seems weird that they release these news things around support resistance areas. I don't think that these pieces of news impact the long term structure of a bull or bear market. I do think in the short term that things can be pushed and shoved around for, say, a few days or weeks. I do think that is possible. Coming down, we've got Warren Buffett. Market forecasters will fill your ear, but will never fill your wallet. And that's what a lot of people look for on YouTube. They look for forecasters. They want forecasts. What is your projection of stock price? What's your projection of oil? What's your projection? I'm going to tell you this, guys. I don't think the projections mean anything. And that's what Warren Buffett is basically saying here. Market forecasters will fill your ear, but will never fill your wallet. They're just guessing. So, again, it comes down to buying value and being patient. Don't use forecasts as a guiding factor for how you should invest. That's how I'll say it. identify trends, which is good, identify things that are undervalued, that are bottoming and changing and inflecting into a positive trend from, say, a bottoming sideways pattern. And I think that's about all you can do. The forecasts, they're all going to get it wrong for the most part. They're not going to get price and time right. It's dang near impossible. And if someone does get it right, it's by sheer luck. The quicker you realize that, the quicker that you figure that out, the better off you'll be developing strategies for your portfolio and managing risk through perhaps portfolio allocation. Admiral Antimony says antimony hitting all-time highs again. Antimony's down here. It was up a little bit, all-time high. I know some people were asking me, well, what are some good ways to invest in antimony? And antimony, I think, has had a massive run. I usually don't invest after things that have massive runs. I look for things that are down and bottoming. The things that are down and bottoming right now, lithium, that would be one I would be watching, would be more like lithium. Then other ones on here, I think silver potentially could break eventually in the future. It's big, 50-year cup and handle. And then I think platinum is also squeezing up. But other ones here, uranium looks good too. Uranium's bottomed and starting to turn higher. I don't know what antimony is. I don't know if I can yank that up on stock charts. I'll have to check. But anything that goes up a lot very quickly, like gold, for instance, I would not be going into gold. It's gone up too much. I look for stuff that's down and squeezed into patterns. Ross Hendricks says, the art of the pump 101 states you must always release at least one and ideally several pre-announcement pump ahead of the actual pump itself. Foaming the runway is absolutely key to maximizing your pump mileage. And Donald Trump is pumping. He's saying, my next truth will be one of the most important and impactful I have ever issued. Enjoy. So he's pre-pumping it. Pre-pumping it. Are we going to get a huge pump out of this thing? I don't know what it is, but we'll find out later. It says, oh, wow, my next truth will be one of the most important. Yeah, there we go. And it says, any guesses? I don't know what it is. I have no idea. Probably tariff information, probably some sort of, I don't know, tariff information. That's my guess. I wrote, here's Mike Tyson, a quote. It says, everyone has a plan till they get punched in the mouth, Mike Tyson. And I wrote in there, same with stocks. So everybody has a plan until they get punched to the downside. And then all of a sudden, the stocks that are down are bad and the stocks that are up are good. That's almost always the case. If you listen to people and the way that they talk about companies, if they purchased a stock at some arbitrary start point, so let's say they made a portfolio and they did it on April 4th, and then you ask them, what are your most hated stocks? What are your most favorite stocks? They're going to say, my favorite stock is one that goes up a lot. And then they're going to be their hated stocks are the ones that go down. But they arbitrarily bought these stocks all on the same day. And some will go down, some will go up. A stock and its performance in the short term is not necessarily correlated. Your favorite companies should be ones that have very good valuation. So something that's massively undervalued. And then the business has huge growth behind it. So think of it as the sector having crappy sentiment and fundamentals, maybe short term. So crappy sentiment, fundamentals like oil at this time. And then you find a really solid oil company growing the business at something like 20 to 30% per share growth of either production or free cash flow. And when something happens negative in the market, everyone has a plan until they get punched in the mouth. Everyone has a plan until they see red in their account, and then all of a sudden they start chucking companies out of it. Why? Does the price movement have anything to do with the company? If the answer is no, then I would be looking to buy more. The question then becomes, can anyone perfectly time the market? My answer is no, they cannot. A lot of people wait until they break a billion trend lines, but at that point, your risk might be too high to buy the stock. What do I mean by risk? Risk is a function of where you buy it in relationship to the valuation of the company. That's kind of one of the big deals there. So if you wait, and some of these companies come off bottoms like rocket ships. They might come off the bottom 200-300% in a month or 2 months or a couple months. And if you miss the bottom or close to the bottom, you might have to be thinking, well, what's should I buy it up here? But that 300% move or 200% move off the bottom might have been your safety net with relationship to maybe the valuation metrics. But you've got momentum, but momentum doesn't necessarily give you that risk reward that the valuation would give. So the technical analysis only people, they look for all these trend line breaks, but I would say that's the riskiest form of investing if you're not looking at the fundamentals of the company at all. Because you could be buying very highly overvalued assets uh, with chart pattern breaks, and then they just break on down to the other direction. Sometimes you can catch it. Maybe you can get a false breakout to the upside and then it reverses. But if you buy stuff that's undervalued, you can hedge yourself with a longer time frame. So let's say you didn't perfectly buy the bottom of something. Well, you just keep holding on to it if it's undervalued and a good value. And some of these stocks, they can go up big and they can go down big in a very short period of time. Here's the XOP chart. So XOP, yeah, you know me. What I did is I took this downward move, I flipped it, which is the flip there, and then I put it over the current price action, and it looks pretty dang close if you line up bottom to top to bottom. And we could bottom here, perhaps, if that fractal flipped is similar to the move that we had down here. So we're probably pretty close. And that is a shoulder, head, shoulder scribing out on the right-hand side there. So I think it looks good. We'll see what happens over the next week or two. Here's another one, URA. I said, get ready for the launch. DJ Gene, get ready for the launch. That's what I'm referring to. DJ Gene. You guys remember that song? URA and URNM. So this is uranium. URA looking fantastic. I've got a nice little resistance there coming up, using it as support. Breakout. We hit it again right here. That was the perfect buy point, and we could get a launch here. This looks real good. And then here's URNM, another one where we got some support there. We broke through it, consolidated on top of the support, started to run, got a little bit of resistance here. Looks almost like a three-hump consolidation coming down. And it looks like we're breaking higher here in any second. Looks really good for URNM. Breaking, this is Turkey, and this is the Turkish lira closed at its lowest level against the US dollar in history. And the US dollar is free falling too. So we got the dollar going down and the Turkish lira. I mean, this is jetpack lower against the dollar, which the dollar is falling. Now, some people say, oh, well, look at the DXY. The DXY is a relative strength indicator. So that is position relative to other things. If all currencies jump out of an airplane and they're all going down, we're only measuring the position against each other. They're not measuring the position against the plane, if that makes sense. And this here is must be pencil diving off the airplane in relationship to the dollar. Pencil diving. Stock market is going to be a movie tomorrow, says Dave Portney, and this is breaking. U.S. announces China trade deal. Besant says, I'm happy to report that we made substantial progress between the United States and China in the very important trade talks. First, I want to thank our Swiss host. The Swiss government has been very kind in providing us with this wonderful venue, and I think that led to a great deal of productivity we've seen. We'll be giving details tomorrow. I can tell you that the talks were productive. We had the vice premier, two vice ministers who were integrally involved, Ambassador Jameson and myself. And I spoke to President Trump, as did Ambassador Jameson last night, and he is fully informed of what's going on. So there will be a complete briefing tomorrow morning. So hopefully, good news comes out of this. Um, Another thing, when you put on investments, one of the questions that you want to ask yourself is, has all of the bad news been priced in? And if any other further information were to come about in the future, would it impact the investments in a negative or positive way? So one of the things that I look at or was thinking about in this particular situation is that if we have these gigantic tariffs on China at this current time, do you think we could get worse tariffs than what are already on? Or do you think any kind of news that could come out in the future would be beneficial to the holdings? And I would say that given where they are at, that in the future they're going to be beneficial. It'll be upside versus downside risk. So that's also things that you want to consider if you're taking positions. If the negative news has already been priced in, and if something that does come out in the future would be more likely positive or negative. You can't have $50 oil and drill baby drill, said Andy Hendricks, the CEO of Patterson UTI Energy, which is a drilling company. They operate the second largest fleet of U.S. onshore drilling rigs. Those two things are incompatible. You guys remember how worried a lot of people were about a decline of oil and drill baby drill? They're like, oh, well, they're just going to drill. It's like, no, they're not. Even at $70 oil, they were not drilling. $50 oil is going to cause a price spike in the future. So here we are, and we're going to get a price spike, most likely. And the price spike is going to be over the next, say, 2 years, something like that. Robert Friedland says, we want to grow in copper over the next 20 years. The world is going to need up to 70% more copper, says Mike Henry, CEO of BHP. Brian Feroldi says, this is what drives stock returns. In one day, it's news. 1 quarter are analyst ratings. 1 year is valuation multiples. 5 years is revenue profit growth. 10 years is returns on capital. And 20 years is people and culture of the company. One of the main things that I look at is returns on capital for companies that control the selling price of their products. The most important thing for a commodity company is the commodity price itself. Yes, returns on capital matter, but the commodity price determines their returns on capital. So commodity price is the most important thing for a commodity company over a long period of time, even in the short term too. It'd be like commodity price, commodity price, commodity price for the majority of this. Markets and Mayhem says, we may not care much for Kenny G, but he's not wrong here. So Kenny G is Ken Griffin, the Citadel CEO. He says, tariffs open the doors to crony capitalism. The government starts to pick winners and losers. I thought that would play out over the course of years. It's terrifying to watch this play out over the course of weeks. So they are picking winners and losers. Those who are not vertically integrated and obtain a lot of their inputs from, say, China, have a way different outlook of their future versus companies that, let's say, are vertically integrated in America. I don't think that governments should be able to determine these winners and losers. I think that's a very, very, very bad thing. If you're going to implement something, you got to give these companies time to unwind what they've got. So I don't know. I agree with Ken here. They're picking winners and losers. That's not a good thing. It's very not. It's an absolute horrible thing. Think you're bad at timing the market. So are CEOs. So CEO business confidence, expectations economy 6 months ahead. Basically, they're the most bearish at market bottoms. These are all incredible times to purchase stocks and or commodities, depending on what you're looking at. And these are the bottoms, the bottom of all of these. And all it is an extension of the sentiment. They are no different than regular human beings. Everyone gets sucked into the negative sentiment vortex. Gold market chart book. So this is gold and Aggra commodity prices are both trending higher. What does this tell you? It tells me that these are probably both going to go up. The equal weighted Aggra commodity index will most likely go up. Same with oil. Gold's our leader, and we're going to see probably a big move. A couple of quotes here. Warren is scanning the world trying to get his opportunity cost as high as he can so that his individual decisions are better. And then Warren Buffett says everything is a function of opportunity cost. Everything is a function of opportunity cost. $4,000 gold says the Dow Jones gold ratio is at 12.5. It will come down to 1.1 again or lower. Lower. Hopefully I said that right. Where will they meet? $20,000 gold where Dow Jones falls 50%, gold marches on. Is it $40,000 where Dow Jones stays and gold revaluation into 40K? Or do we get a crack up boom, a hyperinflation where gold goes $100,000 an ounce plus? I don't know. But I do think that this ratio will decline, which means I should be in hard assets and gold. URA, another one from Uselink, he says, are we still on track for completing one of the largest Wyckoff accumulation patterns ever seen? Yes, we are. We are at the doorstep to one of the best periods of the uranium miners outperforming the uranium spot price. According to this textbook pattern below, he's matching up that pattern where we could be putting on a Wyckoff bottoming accumulation pattern, which means that uranium, the ETF, is going to outperform uranium futures. Eric Yoon, let's do a quick read on this real quick. He says, let's get something straight. Most regular people don't own a significant amount of physical gold bullion compared to sovereigns and central banks. Precious metals price suppression is a game between countries. They don't care about the tiny number of small people who own physical gold. Gold price revaluation will screw over most people in the world except for a few physical gold owners because it is an act by central banks and sovereigns capturing productivity from common folks to write off their debts and finance government. That's you can't stop this train. They're printing money, inflation, because of all the debts. Most small investor people are invested in miners, which are physical gold proxies. When physical gold becomes difficult to get or unavailable and GLD gets exposed as bullcrap, miners will fly because they are the only gateway for the mass public to be exposed to physical gold's upside. And he says, make a comment down here. Most common folks are struggling to see the practicality of physical gold while sovereigns and central banks buy physical gold bullion hands over fist. And everyone, they complain about this. Oh, go buy some digital currency. Okay. And that's all we've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Use that special coupon code. And we'll catch you next time. This is Finding Value.